what you learn is, no, rich people don't pay taxes because they're using their money in investments. They're putting their money into investments that the government wants to encourage, like housing.
Hello and welcome to Rich Dad World. And we have a very special show today. We've got two great guests. One you've seen before, Tom Wheelwright, who is our tax strategist, our personal and business tax strategist and CPA. And one of the smartest guys when it comes to taxes, because he enjoys reading the tax code. It entertains him. It puts all of us to sleep, but it entertains him. And that's who you want on your team. So Tom's been part of our team for many, many, many years and a key player in the whole Rich Dad world. And Jason Hartman, and Jason is the CEO of Empowered Investor Network, and it is a real estate education and referral network. And of course, Robert is here, and we are going to be talking about what we always talk about, the power of education, specifically real estate, but beyond that as well. Because today, as we all know, crazy, crazy times. We don't know what's coming tomorrow. So the more prepared, the more educated we can be, the better we are. So I'm going to stop talking at this point and let our esteemed panel take over. And I'm going to turn it over to you, Robert. Welcome.
Well, thank you very much. And there is, especially today in this insane world, and it is insane, that you better have more education, not less. And the worst thing to do is do nothing because you're confused. You make up your mind either way, either in or you're out. Well, what I mean by in or out, are you in education or are you out of it? And the reason for that is in every investment, there's the macro and the micro. You can't have macro without micro. We can't have micro without macro. The other reason you need more education, not less, either in or you're out, is because real estate is illiquid. And it's not like a stock or a bond or a mutual fund or a 401k. And this is deja vu all over again. This is 2000 and 2008 all over again. And not to confuse people, but there's a thing called the repo market and reverse repo market. And those things are coming apart at the seams. Now, most people will say, oh, good, I'm going to stay out of real estate, when it's really the best time to get into real estate, but you better be educated. So we have a lot of stupid people in the market. That's bad news for stupid people, but good news for smart people. Because, in 2008, Kim and I made more money in 2008 as the market crashed. It crashed and it gave the best real estate in the world went on sale. But the average person was saying, oh, I don't want to fix toilets. I said, because you're an idiot. I mean, Jesus, they're giving this stuff away. They were like Neiman Marcus put in, Gucci on sale, and all the idiots run away from it. But the reason we do this, and we do this with Rich Dad's World, is you need more education, not less, but also who do you take education from? The big reason why real estate is more crucial than stupid 401k investors is because real estate is illiquid. You buy it, you own it. If it's bad, you're gonna go down with it. And if it's good, you look like the second coming of Jesus or something. You look like the genius. So right now, Kim and I look like geniuses because in 2008, we had great advisors around us. We had great smart people. And we made frickin' fortunes on debt. In 2008, Kim and I borrowed $300 million. The average guy can't borrow $30,000, but $300 million to buy real estate that was crashing seemed like nuts. But today we look like geniuses. And the same thing is about to happen. So I'll say it again. Either you decide to get more educated and get educated by smarter people or get out. But this is not a time to be in or out. You got to know at least you're committed to education. And that's what Rich Dad's World stands for. And we have Tom Wheelwright. He's been with us for 25 years. And he's seen the tsunamis come and go, the waves crash, waves ride. And it's because we have great tax guys like Tom that we have the courage to go in what's that song? I go where wise men fear to tread. And so that's why we've got to have smarter people on your team. And Tom has seen Kim and I go in and out with Ken McElroy. I mean, we've bought, I think, $1 billion in debt now, because debt is real money since 1971. And guys like Dave Ramsey says, live debt free. Well, for 99% of the people, you should live debt free. You don't know anything about money. But debt is money. That happened in 1971. So welcome, Tom. And then we have Jason Hartman, who is a young guy in this thing. He understands it. Tom, what do you want to say about the value of having somebody like you on our team and Kenny and all that stuff?
Well, I mean, the good news is if you were to go to Neiman Marcus, use your example, and say, and they said, well, we'll give you a 20% discount or 30% discount, you'd be there first thing in the morning. You'd be lined up. And yet that's what the government's offering. They're offering, if you invest the right way and you have the right advisors, they're saying, look, we'll give you a 30, 40% discount on your investments. Mm-hmm. And so even if it's a tough market, even if the prices seem high, like they do now, the government's still giving you a 40% discount through tax incentives. So that's why the taxes play such a big part.
And the average person goes, well, how come I'm paying 18% on my credit card? You don't know good debt from bad debt. And it's people like you should listen to Dave Ramsey and live debt free. So welcome to the program for the first time, Jason.
Yeah, thank you, Robert. Appreciate it. And Kim, too. What you said is so true. And this is a scary time, but it's at the same time, it's a time of opportunity, like you mentioned with what you and Kim did during the Great Recession. And Tom also, mentioning that the government is essentially subsidizing real estate investors, not only through the tax code, as he was referring to, but also through these government-sponsored entities like Fannie Mae and Freddie Mac that buy the vast majority of these mortgage loans, the debt, as you were talking about. And then it gets better because you rent the house out or the apartment building out, and your tenant pays that debt for you. And then you get a tax deduction. You're literally getting paid to borrow money. It's an incredible opportunity.
One more thing, just to be clear. Kim and I are investing more than ever before. And so let me say this again. It's not real estate. You've got to be 10 times smarter today. There's more opportunities than ever before today, but you'd better have great advisors like Tom and my partner, Kenny, and we just met Jason at another event. And you really got to choose your teachers wisely. So you've got to be smarter today.
And Robert,
right,
yes, you do. And you mentioned, there's all these opportunities that are coming up. And I'd like to ask Jason, and you've got this great network, this empowered investor network. What are you seeing? Where are the opportunities that you're seeing specifically when it comes to real estate? And what trends should we be paying attention to?
Yeah, Kim, where we're seeing the opportunities are in these good, solid, linear markets, these cash flow oriented markets that aren't expensive, and they are business friendly and they are landlord friendly. So you don't have this type of environment where if you have to kick a tenant out because they're not upholding their contract, that you're looked at in the courtroom as the big evil landlord that may have one house, right, that you're trying to use for your retirement. That's not a big evil landlord, okay? It's ridiculousness. So, in places like New York and California, people can squat in your property for just amazing amounts of time if they know how to work the system. In Arizona, it's the opposite. In Texas, it's the opposite. In Florida, it's the opposite. Tennessee, even Georgia, these are more landlord-friendly, more business-friendly places, and these are the places with the growth. They want their cost of living to be lower, and oddly, their quality of life is higher for less money. It's just a great deal, and many of them can work remotely. So,
and would you say, if you're talking about the places that are real estate friendly and tax friendly, and Tom as well, like you to chime in on this, you would want people to go to wherever they're investing, right? You want them to get there, to check it out, to learn about the markets, not just blindly turn their money over to somebody that says, oh, I got a great deal in Dallas. I got a great deal in Miami. You want people to go there and check it out and learn for themselves, correct? I
Be
see a lot of people that just want to throw their money into a deal somewhere.
Right, right. No, be careful with that. That's a good word of caution. Many of our clients go see the properties. Some buy them first and then go see them. I would say that the important thing is to do your due diligence. A lot of that can be done online now. There are so many tools. Just starting with good old Google Maps and Street View and looking at the neighborhood, looking at the demographics, and we help people research all that stuff. And we recommend that people invest in at least 3 markets, but not more than 5. Back in 2004, when I started investing nationwide, I made a huge mistake, and people can learn from my mistake. I was in 17 markets at one point. That was a mistake, right? That's going to the all-you-can-eat buffet and, binging too much, right? So 3 to 5 markets, and you'll be well diversified. Good linear markets, meaning these markets where they don't make the news. These are markets that are somewhat boring, really, but they're good investment markets. They're not sensational. They don't have big swings, big ups and downs, necessity-oriented housing that people need, housing that's in and around the $200,000 mark. I used to say, by the way, $120,000 mark, but prices have changed. And that's another reason to do what you and Robert recommend, which is using debt. And Tom, of course, spoke to the tax benefits of that. So
the other thing you can do, if you're looking at, okay, what market is going to be investor friendly, you can actually start. I start by looking at what do their taxes look like, right? I mean, it's not surprising or shocking that the high tax states are also the low business states.
Right.
They're also, the low investor states. You have the low tax states. Arizona just cut its tax rates in half. You've got Texas with almost a zero tax rate. You've got Georgia with low tax rates, Florida with a zero tax rate. So you've got these states, Nevada, Utah, all have low tax rates. Well, guess what? That tells you that that's a business-friendly environment. That tells you that they're trying to encourage people to come in instead of pushing people away, which is what the high tax states are doing.
Absolutely. What gets rewarded gets repeated. And, they're rewarding businesses. They're rewarding money. Money always goes where it's treated best. And that's what you want to follow, that trend. The places that treat money well are the places that you want to invest in. Yeah.
And anybody who supports higher taxes is a Marxist. And when I tell people we don't pay taxes, they think I'm a criminal. No, I'm a capitalist.
Yeah.
You want to be a Marxist? Pay taxes, idiots.
Yeah.
I mean, give me a break. Marx was the guy that said, you want to kill capitalism? It's higher income taxes and inflation. And that's what they're doing.
Robert, that's part of the dialogue that's going on, right? Is that rich people cheat, and that's why they don't pay taxes.
Right.
And when you get financially educated, what you learn is, no, rich people don't pay taxes because they're using their money in investments. They're putting their money into investments that the government wants to encourage, like housing. Okay, for example, like energy, like agriculture, like business. That's where the government wants you to put your money. You put your money there, you pay no taxes. I mean, it doesn't matter if you're Tesla and putting your money in technology, or Bezos, Amazon, who's putting their money into business, or if you're, Jason Hartman putting your money into real estate. It's pretty much the same thing. The government wants you to put your money there, therefore you get tax breaks. And really, as long as you're building real assets and hard assets, you should never pay any taxes.
Lower taxes are good for capitalists. Lower interest rates are good for capitalists. Only idiots have credit card debt because they went to school. If you understand it that macro, then maybe you can smell the coffee and wake up and get some education. So we have Rich Dad's World. I love those guys because they promote the philosophy, the theory of capitalism, not Marxism. If you can get it that way, you'll understand. If you got to look at this picture from the macro point of view, wake up right now. So that's why Rich Dad's World, we're going to offer you more opportunities to get educated, have a coach. I have coaches. Kim and I have coaches. We have coaches for our health, our wealth, and our happiness, because health, wealth, and happiness are important to us. So we have coaches for that. Tom is one of our coaches for wealth, because if you love paying taxes, don't give Tom any money, because he'll make sure the government takes all your tax rate money. Is that correct, Tom?
Oh my heavens! So I'm glad you brought this up, Robert, because one of the things I tell people is you guys are really the best clients I've ever had, and the reason is because you really want coaching. You really want to know, what do I do next? Kim and I talk on a regular basis. Okay, what needs to happen between now and the end of the year? Robert, you call me. I've got money. What do I need to do with it? And it's not that you're looking for advice as much as you're looking for coaching. And I think that's a really big deal. Is that it's not just finding a coach, but it's actually being coachable. And you guys are really literally the most coachable people I've ever met, which is amazing given, your status. And you don't have to be, and yet that's what's gotten you where you are.
Are you worried about your financial security in these unprecedented times? If you are, the next minute could profoundly impact your financial security. Imagine waking up to find the economy has plunged and your portfolio has plummeted 30 to 45%, while banks are in turmoil, holding your money hostage while waiting for FDIC intervention. Where would you turn? For many, this may sound like fiction, but it's a stark reality for those that have money on the line. Recently, America's awoke to both the NASDAQ and the Dow, plummeting over 1,100 points each and triggering a frenzy of sell-offs. History shows us how a single event can crash the market, like the dot-com bubble of 1999, the subprime mortgage crisis of 2008, and the pandemic of 2020. But today, we're facing multiple bubbles: commercial real estate, stock, bonds, and banks. Combined with the relentless inflation, the threat of global recession, the specters of war, and you have the perfect storm. The consequences could be catastrophic, plunging us into unprecedented crisis. America is sliding in the age of discord, with trusted institutions collapsing and the democratic norms unraveling. The quality of life for Americans has declined. Wealth is concentrated among the rich, while the median American family income stagnates, creating a dangerously top-heavy social pyramid. Moreover, hostile countries like Russia, China, and Iran are working to destroy the U.S. dollar. Gold is a no-matter-what store of wealth that you need. That's why Robert has been such an advocate of gold, and he trusts Allegiance Gold. Allegiance Gold is ready to help you incorporate physical gold as part of your portfolio and protect it against economic uncertainty. Visit protectwithrobert.com today to learn how you can qualify for up to $5,000 in free silver with a qualifying investment. Or give them a call at 844-3-ROBERT. Remember to mention Robert and Kim sent you when you contact Allegiance Gold. Secure your IRA or 401k today with Allegiance Gold. Visit protectwithrobert.com or call 844-3-ROBERT.
Yeah, you've really got, I'm not kidding you. It's health, wealth, and happiness. Kim and I have coaches for all three. Right, Kim?
We do. We've always had coaches. And, I think that's, if there is any shortcut to success in business and in investing, it's to get a great coach, to get a great mentor.
And obviously the idiots out there are saving money. They want to save money. Are you nuts? Are you freaking nuts? Why are you saving money when they're printing it? Why are you working hard when they're raising taxes on you?
On top of that, Robert, so the only people who get taxed are the savers. They're the savers and the consumers. You're only taxed on what you save or consume. Anything that you invest back into hard assets, you get a deduction for, you don't pay tax on. So, it's so contrary with the whole message out there where you need to save, put it in the stock market. You don't get a deduction for putting money in the stock market because that's not a hard asset. That doesn't actually build real wealth. All that does is pump up Wall Street.
And that's why I was saying earlier that if there is any shortcut at all, it's to have a mentor or to have a coach, because Tom, I'm not going to study the tax code. I'm not going to understand the trends that are coming in your world. And I don't want to, but you're in it every day and you're doing it every day. And you're a real true coach and mentor. Same with you, Jason. You're in real estate every single day. So you're a great person to mentor and coach other people, because we want to be coached and mentored by people that are doing the real thing.
But that's why you have coaches, like you say, is why would I want to do something myself that I could hire somebody else to do who's going to do it and teach me how to do it 10 times better than I can do it myself.
Or learn from somebody
one
who's
more
done it
macro
and
change
learn
coming
from
in.
their mistakes and all their experience. That again, a little bit of a shortcut, if there is ever such a thing as a shortcut.
So let me explain one more macro change that's coming in that's going to cause huge problems. Now, huge problems means huge opportunities. So that's why we have Andy Tanner and guys like John McGregor on as our coaches, because you make more money when markets crash. It's the most it's counterintuitive. Like when the real estate market crashed in 2008, Kim and I went back in, but most people run. It's going to affect everything we do. And people are still sitting around saying, oh, real estate always goes up. Oh, my house went up in value. Oh, I'm going to save more money. Oh, I'm going back to college, get my master's degree, maybe become a doctor. Tom, who pays the highest taxes?
Doctors.
Doctor.
So Jason,
The first time I ever played the cash flow game, Kim and Robert, I got to tell you this, I was the doctor. That was my role the first time I ever played it, and I thought I would win because doctors make money, right? But they don't keep much of it. So, yeah.
so Jason, as a coach and mentor right now at this moment, what are the trends you see coming? What's coming down, and what should we be paying attention?
We're just going to see, there's a lot of upward pressure on rents now, but I think we're going to see a lot more upward pressure on rents over the next 5 to 10 years. And I think we're going to see a decline in the standard of living for a lot of people, unfortunately.
For most people, they're going to get wiped out because they went to frickin' school and they listened to Marxists telling them that paying taxes is good and you should get out of debt because debt is bad. But at Rich Dad, debt is good because it's tax-free, right, Tom?
No, it's tax-free, but all those deductions you get from investing in hard assets, you're just compounding your tax benefits because you're using the bank's money. The bank doesn't get the deductions for depreciation or intangible drilling costs or anything else. They don't get any deductions. What they do is they give you the money and you can use their money to get deductions against your income. So you're compounding not just your return on investment, but you're also compounding your tax benefit by borrowing. So I can't imagine going into real estate without borrowing because you lose so much of the tax benefit. Literally, you lose 80% of the tax benefit if you use your own money as opposed to borrowing and using the bank's money.
So let me say it again. Anybody that tells you I'm a criminal because I don't pay taxes, they're probably a Marxist. Please understand that. That's why Rich Dad's World was created to save your souls.
Robert, on top of that, this dialogue about the rich cheating, what's really happening is those people, the communists, the Marxists, these people who have a job, they're the ones who cheat because they don't have any other way to reduce their taxes.
That's right.
They are the cheaters. Here's what's great. So our beloved President Biden has actually put in this new law that the IRS is not supposed to go after those people. So they're basically saying the people who make under $500,000, we are not, if you cheat, it's okay. We're not going to go after you. We're going to go after the really rich. We're not going to go after you. So they're basically saying it's okay to cheat.
I don't mess with my freedom. And these guys are taking our freedom away by being stupid. And the way they get stupid people is they send them to school where they learn nothing about this. And those are the guys that call me a crook. I'm going, wait a minute, I'm not paying taxes. Remember what Hillary Clinton and Trump were on the debate in 2016. And Hillary said, yeah, Donald Trump doesn't pay taxes. He says, that means I'm smart. And the world went nuts. Well, Trump's an asshole. He doesn't pay taxes. I said, he is smart.
Well, one of the reasons the Rich Dad Company was formed is for freedom. We want people to be free, no doubt about it. And financial freedom is a big part of it.
We don't pay taxes, right, Don?
No, the reality is, people say, well, you're being unpatriotic if you don't pay your taxes. I would say you're being unpatriotic if you cheat, but you're being unpatriotic also if you break any law. The laws are there. The laws are there to protect our freedom, frankly, and so we want to follow the law. But the reality is that there's so many tax incentives that once you get financially educated, you're just an idiot if you cheat. I mean, why would you ever cheat? You don't need to do that. You can legally reduce your taxes to zero. Why would you ever cheat on your taxes?
One of the things that has come out of all this craziness over the last couple of years, and I'm personally curious for both Jason and Tom's. You've seen a lot of this, but commercial real estate is not coming back the way it was. It's not coming back. People are going to be working from home. You've got all this empty commercial space all over the country. What do you see people doing? If people can crack that code of what to do with commercial real estate, how to reuse it, how to repurpose it. What are you two seeing?
Wait. So Kim, what you just brought up a very good point. You see, it's really the valuation of the asset class, and it comes in that time.
Yeah, actually, one of the things that we're seeing, to your point, Kim, is we're actually seeing these hotels being converted into condominiums. They're being converted into apartment buildings. You're actually seeing a lot of conversion going on because smart money will always follow where's the real value. To your point, Robert, is that, if you've got something that's low valued, great, let's turn it into something high valued, right? And so you always have to be looking at then what'll happen with all these commercial buildings that are empty. Well, they're going to be used. They're not going to be torn down. They're going to be used for something. And if residential is where the value is, that's where they'll go. And the government, by the way, will give you tax benefits for doing that.
Jason, what are you seeing?
Yeah, we're definitely seeing the conversion of hotels to small apartments and I guess sometimes condos, but I see apartments more often. It'll be interesting to see what happens with office space because that's much harder to convert to housing, although a lot more housing is needed and a lot less office space is needed. And then, we look at the retail apocalypse that was going on long before COVID. That's just basically a Marxist, Jeff Bezos, who's just destroying all the mom and pop businesses. And, with retail, it just does not look good unless it's something like, auto parts stores or things that are still people do a lot of that in person. Any type of retail like that will probably survive okay. But, the online shopping has just destroyed most retail.
A lot of retail going to services.
Yeah.
Restaurants, various practices,
Yeah.
but not so much retail at all.
Yeah.
Even our CPA firms around the country, we're seeing more and more CPA firms that are going completely virtual, or they're going to a much smaller footprint in their office space. So they might have been in 10,000 square feet and now they're going to 5,000 square feet, or now they're going 2,500 square feet because you see a lot of this shared, okay, somebody comes in and 3 people are sharing the same desk because they're only coming in once a week, something like that. So I think that the smaller, actually, that's another point, is I actually do think that the smaller office spaces are going to get bid up because that's where they're going, right? If you're going to smaller spaces, then you want to be in smaller spaces, and that's what you want your building to look like.
Well, what Buckminster Fuller said, he said the future was that the big office buildings would be homeless shelters. So what Fuller predicted then was these office buildings would become homeless shelters, and they put some college student at the front gate with a little computer to monitor their needs. But let me just say this, there's more opportunity today than ever before, but you cannot say, well, it used to be that way. So Kim and I are investing in healthcare because as the baby boomers age and retire, that healthcare costs have got to come down. And if you're sitting there right now, well, my house is the best asset I own, then you're an idiot. If you say, well, I have a high paying job, I'm going to save money and put it in a 401k, you're an idiot.
And what's interesting about that, all of these people that aren't using the tax code properly, they're the ones who aren't obeying the government. You're doing what the government wants you to do, provide housing to people, explore for energy, et cetera, right? That's what the government is asking people to do. And we're doing it.
That's why you need great coaches. That's why you need more education. And we could go on forever, but I'm afraid we're going to have to wrap it up here.
So let me go macro one more time. Kim and I are investing more than ever because Tom knows that. But we're investing in healthcare. We're investing in food, shelter, transportation, communication, energy, and security. But to sit there and think, oh, well, real estate always goes up in price, That's how stupid most of these people who used to be rich will no longer be rich. So that's why Rich Dad World was created. And you can trust me, I will tell you the way I see it. I don't have anything to hide. I'm not selling anything. I don't have a 401k for you. I don't have an IRA. I don't like the stock market, but I do invest. There's a very big difference, but that takes education.
I love your point, Kim, that, we all have mentors. You guys are my mentors. I learned from other mentors in real estate, in oil and gas, in the macro. Robert's constantly teaching us about the macro world, and we watch videos and have discussions every week about the macro. So this whole idea of just getting better educated from people who know stuff we don't know, to think you know it all or to think you can do it yourself, I think that's a fool's errand. Instead, what we've got to do, like you suggest, Kim, is let's go to the coaches, let's get the financial education. And like Robert, like you're saying, let's make sure that we're looking at the global impact, because by the way, even taxes have a global impact. You can look at taxes from a global basis. I was talking to an accountant in Great Britain just this morning, and we were comparing notes. And guess what? The taxes in Great Britain are the same as they are in the U.S. And that's a more socialist country than the U.S. even. So just know that the taxes are always the same. They're always going to provide incentives. And as long as we get the education, we're not going to have to pay taxes, and we can do so legally.
Nicely said. Thanks, Tom.
It's education is certainly important. Just, so much of it is accessible through Rich Dad, and it's just a great time in that sense that this education, the real world education, is so accessible to people. So take advantage of that. Real estate or income property, I should say specifically, income producing real estate is the most historically proven asset class in the entire world. In many markets, it's still quite cheap, but in some markets, it is definitely getting overpriced, and there will be a correction. So be careful, and education is key, but take action and don't be overconsumed by the idea of trying to time the market. The market timers rarely succeed over the long run, because it's just very hard to time markets perfectly. But good properties, good markets with good debt structures and good tax benefits, you're going to win the game. So happy investing, and thanks for having me.
One of the things I've heard is that, there are tons of opportunities out there, but the education is more important than ever, because the opportunities that are existing today were not the opportunities from 10 years ago.
Yep.
So if you think you're going to operate on what worked 10 years ago, you're going to probably end up in a world of hurt. So education, coaching, mentoring is more important today than ever to keep up with the trends and keep up with where those opportunities are. So thank you, everybody. Thank you for tuning in to Rich Dad's World, and go out there and keep getting educated, keep learning, and keep taking action.
This podcast is a presentation of Rich Dad Media Network.